Okay, good day traders. I'm just going to share with you some tips right here concerning traps that are made by the dealer. Even as you're all aware, in trading, we have got retail traders, we have got institutional traders, those are the big players, and as well we have got brokers or dealers, right? So these guys, the brokers and the dealers, more or less work together with institutional traders, and they more or less they know where exactly they want price to get to. So for price to get there, it doesn't just go there in one move, in one direction, right? But they create, these guys create traps. They can also trap institutional traders as well, but mainly they aim to trap retail traders, right? So these traps happen at different times, but just like if you study an opponent, any opponent that you study, they have a certain pattern in the way in which they do things. So by the patterns, that is the history of what they do, we can kind of figure out what exactly they are going to do. So a lot of these traps, they happen at what you can also call pivot points, yesterday's high or yesterday's low, as well as what you can say high of the week or low of the week, right? And as well, retail traders are ever hit by this perceived support and resistance. This is where traps always occur, but there's certain patterns, because patterns happen every time. So there's certain patterns which we can use to determine these traps. Okay, so there's one very, well, not one, there's a number, but we all know the world famous, come now, Mr. Mouse. Right, we all know the world famous head and shoulders pattern, right? So this I'm drawing it as a price line, right? Of course, we know there's candles involved there, but this would be the price line. Inverted head and shoulders pattern, right? Price goes up, right? And then we also have got what some people call a double top, which is an M, or a double bottom, which is a W, right? These are the famous traps that they do. And why do they do it? I'll show you. I think I would love to show you using a chart. I always love to use charts to show you how these traps happen. And the most important thing is how to avoid these traps. And remember as well, I said that perceived resistance, if this is your resistance, they will trap you there. You think this is a resistance. And if this is a support, you think this is a support, they will trap you there and then just go through it, right? This is an arrow going down. Same thing here. They will go through it, trap you there, and continue up. Let's just look at the chart if we can see, especially at we can take any pair. Even let's go for one of the majors. Let's just go for one of the majors, right? Let's see if we can see something at yesterday's high and yesterday's low. Okay, all these indicators are available for free on the Telegram channel. You can just check the link and you have it there for free. So already just looking at this, I can see the numerous traps. Okay, to make it easier for you, Let me go to D1. Right. Just look at this whole week of Aussie USD. All these are traps, these pins. Let me just draw a line. I said at yesterday's low, right? So I'm focusing on this green candle here, for example, and I'm looking at yesterday's low there, right? We're going to zoom in on that area and see what exactly happened yesterday and the day before, or those 2 days. That's basically what I'm saying. I want to zoom in and see what happened there. All right, let's go down to H1. H1, let's see what happened. Okay. So here we go. This was the red line I drew. And this blue tracer here indicates for me yesterday's low. Can you see that? That was the low of this day, 20th of November. That was the low that Aussie US reached. And then notice the next day how it came. Look at these red candles. 1, 2, 3. We call those vector candles, right? There's a false move, right? Although, yes, you could have taken a trade that way, but it's a trap to entice traders to think this thing is going to continue dropping. And we see this pin to yesterday's low. This blue line is showing me yesterday's. Look at that pin to yesterday's low, and you can see it forms a mini W. Let me draw it. So whatever happens on the higher time frame, it also happens on the smaller time frame. Okay, it also happens on the smaller time frame. So even here, where is my annotate now, right? So even here, this is exactly what happened. They trapped end of the day with a W there. See that W? And this was the move. That was the trap. So they trapped with that W. Someone thought this is all, look at it, it's going 1, it's going 2, it's going 3, and it turns. So notice they always love to do in 3 pushes. Okay, so that is a trap which we can see. This is H1. So perhaps if I go on to M15, I'm sure it will be even more clearer. Let's go on to M15. I said it was 20th of November. Right. Let's just zoom out a bit. There it is here. That was yesterday's low. Look at how he pinned it. When you see that, you don't enter straight away, but it's a strong indication of the footsteps of the dealer, of the market maker. Look at that. That was the big W, I think, which I had drawn on H1. Look at it, how it just pinned. Just look at that. This happens all the time. That was yesterday's low. Not even just 2 pips dipping into it, but all these red candles forcing you to think they are going down. And as you can see, even on M15, you can notice that W there, right? Even when it comes back, it doesn't even come back to this area. This is a trap. Everybody here who entered a sell is trapped. Okay. So let me, and of course he just shot up the next day. Okay. So let me just explain why these guys use M's and W's. And the pattern, this pattern continues all the time. So what happens is, like I said, the dealer will know price is here, and he'll know I need to get price to this level down there. So he cannot just go in a straight line going down there. No. What he will do is he will come, he knows he wants to go down, but he must get you to think he's going up. So he'll give you 1 candle, maybe hold it, another candle, maybe hold it, give you a 3rd one. By this time, some guys start entering here. I don't know why, for a buy. But he knows already his target is down there by the end of the day. So what does the dealer do? He's got everyone in here for a buy. So he realizes those who have ended buys, they put their stops even maybe somewhere down there. This is where someone puts their stop loss on the first point, and there is the entry over there. So the dealer immediately reverses, comes, he takes out these guys. Whilst he takes out these guys, some guys are already thinking to say, wow, I've got the direction wrong. They will enter anywhere they say, let me enter a sell. And they put their stop loss somewhere there, right? This is how most retail traders trade. So they think, oh, I got it wrong. I've been stopped out. I might as well sell. Some will even enter where they were stop was hidden. And what does the dealer do? He picks these up. He says, oh, let me go back and collect some more stops. He comes back up here, maybe just pins it with a pin, on the candle. He takes out these stops again. So now he's taken out 2 stops, right? Now when he's taken out 2 stops, others will enter again to say, oh, I was right the first time for a buy. Let me enter again. So others will enter again to say, for sure, this thing is going long. This little pin just gives them that little bit of hope to think he is going long, and then what? And they would have put their stops again, maybe somewhere down there or below there. And now, when they've collected those orders who think they're going long, he already knows he has to go down there, and he just uses a shift candle. This is on M15 time frame I'm speaking of, but of course it can happen on H1. The same pattern repeats on higher time frames and lower time. Takes out these stops, so he's hit 3 lots of traders, and then he will slowly go down and close the day where he wants to be. The same is true with the W, right? The same is true with the W. He induces sellers. People enter for a sell. He comes back, he hits their stops. People enter for a buy. He comes back, he hits their stops, and he knows he wants to go long, and then he goes long. Okay. So a head and shoulders is just basically a more complicated W. Okay. It's just a more complicated W, but it is basically the same pattern. So that is one of the traps of the market makers. Maybe I can just show you one more where I said to you they use the perceived resistance where you think it is a double top, whatever, and they break it and he continues up. So this is perceived resistance. They love to do this. Or perceived support where you think he's bouncing on a level. Just because he keeps bouncing on a level doesn't mean that he cannot break it. He does that to make you think it's a support. He breaks it and he gets out of there. Let's see if we can see that in any of our charts. Okay, let's see. Let me take Euro Pound. Right. Let's have a look at this thing. See if we can see what I'm talking about. I'm using H1. Already here you can see it just over here. Perceived support which he broke. Let me just come now. Let me mark a line. It happens on every time frame, eh? It happens on every time frame. So over here, this could have seemed to be some support zone. So support is not really a line, it's a zone. Okay, you will learn all this if you take up our lessons. So have a look at this. This is what we would have seen before this. We would have seen a bounce here. That's 1. Another bounce here. That's 2. Look at all that he held. And then here with pins again, that's 3. So you would be thinking the next time he comes to this line, he's probably going to bounce up. And again, therefore, here you could still have hope. He's just dipped it. But notice how he breaks it. Just look at this. This is exactly what I'm talking about. This is market maker trap again. So he traps you into thinking that this line, use another color, a bright color. He's making you think this is support. He's making you think this is support. This is support. This is support. Making you think this is support. comes, just pins it, making you think this is support. So he's making you think that this whole area is a support zone, right? It's one of his traps. Already you can already see there's a lot of space for him to play with here, because this seems to be the true support at that point in time. So he's making you think this is a support. But why we know it's not, because it's left down there. Okay, we'll talk about all this if you come into the lessons. But here he is, he's making you think this is support. He breaks it, retests, breaks it, retests, retests. Look at that, how he retests the line. And he gets out of that zone. Okay, so the same thing happens when he gives you the perceived resistance. Look at that, he did not break that line. Just look at that, how he did not break that line, and he went away for some time and he's still below there. Okay, so that's just something I just wanted to share with you on trap move. So avoid these traps, allow the dealer to play his cards, see the M, see the W, see the fake resistance, the fake support, which he plays around with, and always loves to validate these price action chart patterns. But we know the market maker way, and we can see his traps ahead, and we do not get trapped, but rather we trade in line with the dealer after he has trapped the traders. Okay, good day.